Hey, welcome back, everybody. And man, it is an absolutely beautiful day out there. And the question that comes to mind as we are navigating this little crazy real estate market is Glenn Coleman of Redfin. Is he correct when he says real estate has hit bottom? Well, there's a lot of things that could be bottom, and there's a lot of things he is correct about. But I'm not sure it's the correct bottom that a lot of other people think. So let's get into this. Let's delve into a little bit more of what is he saying? Why are we seeing this? And in fact, when we pull this up, according to Finance Magazine, it says home prices are skyrocketing during the pandemic-fueled housing boom. More people are were working from home and could do so from anywhere. Plus, mortgage rates were historically low. So people bought houses, but then inflation followed. But unlike the typical housing cycle, home prices didn't fall. So what happened? Well, home prices kept heading up in an upward trend. Mortgage rates were heading in an upward trend. And we are also seeing that buyer affordability, well, it was going down along with pending sales and along with our inventory. Now, the little shakeup on that is that this last week, we've actually seen an increase in inventory, not only by what's new on market, because again, we had another bump in inventory, but again, as we start heading into the vacation trifecta, we're going to start seeing some buyer pullback, not because of the market, not because of interest rates, not because of a lack of interest. It's going to be because it is beautiful outside. It is sunny. We're going to start seeing more people. You know, their attention is going to go elsewhere. Plus, in a couple of weeks, we're going to have Memorial Day weekend. And that's a 3-day weekend, and people go out and have a good time. Then we have kids getting out of school. We got a lot of things that are going to be happening where sellers are going to start to feel that slowdown. And that is going to be totally common. Now, the good news is for buyers, that means more inventory, more opportunities. But more importantly, as we start taking a look at some of the headlines here, we're going to start to see some trends. And that is applications are on the rise. We're going to start seeing some economic data coming out this coming Wednesday that's going to make things, well, just a little bit volatile. We're also starting, we're also starting to see a little bit of that ARM refinance, ARM type of mortgages to get rates down as they basically kind of wait out to see if we will get below the sevens, in which I think we will, especially as they start their quantitative easing in June, or basically they're going to stop it, I should say, put the severe brakes on it, add some more liquidity to it. It's going to drive the 10-year treasuries down. Now, even though mortgage rates don't follow it, mortgage, you know, the 10-year treasury doesn't control mortgage rates. So we're going to start to see interest rates coming down, bond rates starting to see some improvement. And that will then again bring a lot of buyers out, start bringing down some inventory. Actually, it'll be pretty good timing for our summer market. And remember, when you look at numbers, we're always looking at a rearview mirror 30 days, 60 days behind us, because that's what a lot of these guys do. So when we take a look at Freddie here, so right now we're at about 6.09. A lot of par pricing out there is in the high sixes, but basically 7.09 is our financing with Freddie rates right now. What is the benefit? We have seen with our numbers, and because the feds didn't absolutely scare the crap out of the industrial investors, we saw some moderated numbers, which has allowed the interest rates to come back down. Because remember, mortgage rates are publicly traded. Now, when we head over to our next slide here, let's take a look at the Northwest MLS running 7-day average. In other words, what's coming on market, what's going off market, how does that velocity relate to each other, what's going sold, and what are the important metrics that go into this. So as we roll this in, Again, we're going to see some data that's going to be super important as far as reports, and that is going to be on Wednesday. All right. So when we pop over and we dive into this a little bit deeper, look, we have 1,409 homes that came on market in the last average 7 days here. And then pended were 1,518 with 884 that actually went pended. That's super important to understand. Okay. Because what we're seeing are pended sales are still happening each and every month for well-priced homes. Now, there's a video out there that is called, What is Buying a Listing? Super important to watch, especially if you're considering looking at putting your home on the market. Make sure that you're buying and getting what exactly you should, because otherwise you'll become one of these statistics here. So we blow this up where you are one of the many 520 people that are reducing their price, or you're expiring, or you're canceling your listing. Because here, at the end of the day, price is your first impression. Price is absolutely the first impression. People give it a go, no go based on price. And that is an element that just is irrefutable. Is no different. We have all felt it, where we look at price as that is a good value, that is not a good value. Do I move forward? Do I not? So remember that it is no different when it comes to marketing your home. Moving on. So when we take a look at our next slide here, make sure if you're looking for super accurate information, make sure you share this with people that you like and one person you don't like. Let's make sure that everybody has a great opportunity to get quality metrics in our area so that you can make the best business decision possible. Now, let's delve into the Northwest MLS. First, let's take a look at what is the average price for active homes and the average sold price. Now, as we can see, we're still trending in that little bit less as far as an average active price. Last year, we were at $1,088,000, and now we're at $1,046,000, or roughly about 3.94% less. That has been inching up just a little bit. But the sold price average is up 10.6%. Actually, let me blow this up a little bit for you. There we go. Is up 10.6%. We've gone from 750,000 to 833,000 for this year is a average sold price. And that is across Washington State, 3/4 of Washington State. That is our average price. And so that is a consistent number that we're looking at, which means that we are still hitting in a positive trend, even though we are seeing higher mortgage rates. Part of that, a lot of that is because of our limited inventory. We're at about 1.8 months of inventory. We were 1.5 months last week. And that is going to give us some really important metrics as we continue into the late May and June numbers, because after the July 4th weekend, we'll pop back up again and see some pretty significant activity until about the first, second week in August, when people start pulling back again. All right. Let's take a look at the Northwest MLS. So when we come over here and we take a look at that, let's blow this bad boy up here. Hang on. There we go. All right. Look, when we take a look at our year to date, our sales are off just a tad bit, about 1.2%. Just, about 400, 600 homes. Not a big deal. It's really at the end of it's 200 homes. It's not a big deal, because what we're seeing is consistency to last year. And last year we started to get back to a balanced market. Same thing with pended. Pendeds are up 1.6%. The key thing to understand there is when we start taking a look at the higher interest rates, even though they've been coming back down, the key thing to look at there is, what is the velocity? What are we running into? What's starting to pull those numbers back that were all positive last week? Some of it, weather. We saw a significantly less number of people actually going pended, looking at homes, than we did the week before that. Why? It was beautiful weather. This weekend, it's beautiful weather. We're already hearing that some of our open houses are a bit slower. Why? People are out enjoying the weather. It happens. All right. Seasonally normal. So when we take a look at new construction. And that's going to be super important because look, when we take a look at last year, right? Or I mean, last month, even year over year, our numbers were super, super awesome, right? So why? Well, we're still seeing a lot of incentives from builders. Yes, which means that when we take a look at our chart here and we take a look at the average prices down just a tad bit, but the average sold price is up. So that when we take a look at our actual prices and actual numbers, we can see that even though our inventory is up 6%, our sold and pending actually are super close to what they were at last year, even when we look at them year over year for the same month. And that is important because we are still seeing that as a huge benefit. Now, even the builders have clearly said, hey, listen, you know what? We didn't get as many contracts last week as we normally did. That is reflected in our numbers. Again, it's seasonally normal, but again, we're talking about very, very small numbers, okay? It's kind of like when we take a look at REOs, which is our next conversation. When we take a look at what we are going to have as far as overall REO inventory, look, you know what? This is super funny. We have our wall of shame. And this year, or this month, I should say, we had 11 homes right off the bat that equaled our wall of shame. In fact, once I got to 11, I stopped, and I wasn't even halfway through Washington State. If you are in Pierce County and you are selling right now and watching this video, I might want to have my agent double check my listing. Just a hint, just saying, because you're on the wall of shame. All right, so let's blow this bad boy up. When we take a look at it, we can see that technically, when we stopped at 11, when I got down to 47, we have a 0 increase. And in fact, if I had continued the other half of Washington State, we would probably have less inventory today than what we had last week. Why? Because, well, it's the wall of shame. Our foreclosures, our defaults are extremely low. The national average is right around 0.8%, and for King County, it's like 0.5%. Snohomish County is about 0.5. Pierce County, I believe, is right on par with the national average at about 0.8. Super small numbers. Super, super, super small. There's a lot of advantages. We've seen a lot of equity come in since the pandemic, like about 32, 35%, which means that a lot of folks are able to sell their home and restart that lifestyle on a even playing field and something that is a little bit more affordable, and or there are other alternatives for them to consider. All right, all things considered, our market is doing incredibly well. Still, rock bottom only means that, look, our buyer affordability flat out sucks. Totally agree, flat out sucks. However, renters, in a lot of areas, it is cheaper to be a renter for the market. The difference is you're just doling out a lot of dollars a month. You know, it's a real bummer if you're, $3,000 a month, $36,000 a year that you're not able to capitalize on. And you might say, well, it cost me more to buy a house. Yes. However, if you're appreciating, at 4% and you have $1 million house, that's $40,000. Look, there's a lot of ways to read that cat. And yes, out of the pocketbook initially, sure, it makes sense. Long-term, 7-year average, doesn't make sense. Just saying, use the calculator. Use the financial calculator that is available down below. Make sure you leave your comments. Hope you have an absolutely stunning and beautiful day. The most important thing is make sure you smash that subscribe button, share the video, like it. Let us know what your thoughts are. In the meantime, have an absolutely beautiful day, and I will see you on the next video. Take care.